Good morning, good morning. February 23rd, 2023. It's 8:25 a.m. Yesterday, as predicted, we didn't do a lot. Price discovery was there. We had the FOMC minutes, had some volatility with that release, but ultimately just basically held those prices lower. And of course, we got a lot of earnings that happened yesterday and this morning. Market's in a different place right now. So we'll get into it. We're also going to get over into that important level I'm talking about, with the most pivotal level in the market. We'll get into that shortly as well. Let's just hit it with the watch list real quick. What we got here? We got Bitcoin's up 1.49%, crude's up 1.33%, Nasdaq's up over a percent, ES up 0.58%. 10-year yield has risen. Russell's up 0.39, and the Dow's up 0.32. We've got the dollar flat at 104.4. Bonds are being sold, 30-year bonds, hence the TNX being up. Even though I know it's a 10-year, it doesn't matter. That still correlates. What else we got here? And the VIX. The VIX is down 2.15%. All right, let's get into the leaders and the laggards. Nvidia with the AI-driven earnings. It's up 10.88% today. Closed at 207 yesterday. It's at 230 right now. Is that sustainable? I don't know, but it's pretty much very beastly. Baba also had earnings. That's up 6.38%. Sympathy play AMD up 4.1% on the Nvidia earnings. Coin in concert with Bitcoin's up 2.57%. Snow up 1.69%. Tesla's up 1.44%. And Meta's 1.24%. I usually don't mention that many, but that's pretty large leaders there, right? Now, as far as any laggard, the only one, the little tiny laggard is Netflix. Netflix, I saw that they're cutting their subscription costs, which would be less profit. So that's probably why they're negative. Let's go into the here. We got Roblox up 1.36. We got Qualcomm sympathy play up with the semis, and Salesforce up 1.25%. Any laggards to speak of? Not really. Okay, let's go into the sectors. No surprise, semis leading the pack 2.67%, technology 1.27%, energy 8.84. No negative to speak of. Okay, all right. Let's make our way over to the SPY chart. All right. So yesterday, what did we do? Now in the SPX cash market, we did hit this trend line, but in the SPY, we did not. We almost touched the 50-day moving average, which lines up with this trend line, right? So you could just say this acted as support yesterday. And I mentioned in the video yesterday, there was so much confluence below us, okay, that it was going to be very hard, I felt, after a trend day lower to push lower. We tried, but it didn't come to any fruition, right? So we're basically at a pivotal moment in the market, right? We closed yesterday at 398, right? Currently, we're at 400. 400 is the key level, right? So it's a kind of wait and see in the markets, right? Let's look at the Qs. And the Qs hit this level, right? 293. I was saying this level is very pivotal. It's been resistance, support, and now back to support. Okay, 200-day moving average is below us. All right, we're below the 9 daily EMA to 20 SMA. All right, we're below anchor VWAP from the FOMC, and we're below the all-time high anchor VWAP. Okay, still above the anchor VWAP of the October lows. So there's a lot of digestion that's going to happen here, and we're either going to see bulls take over or the bears take over. All right, let's get into that triple-headed monster. I've been beating this drum for weeks. I said the smart money, right, is in bonds. Now look what bonds have done since February 2nd. It's just trended higher, and I kept saying that the market, this is the smart money. This just kept trending higher. Not a lot of movement up and down here. It was like a straight up, right? Kind of this forecasted the move down in equities. And now, which is very pivotal, right now, the 10-year yield is over this resistance of 3.92. We're at 3.97 right now. This continues to go, we're going to see farther movement down in the equities. Okay, this is like more risk off for markets, right? If you can get 3.97% yield on a 10-year, right, and that keeps getting higher and higher, the next resistance line we have here is in here at about 4.2. We go up there, I mean, people are going to take their money out of stocks, and if there's a recession looming, they're going to buy bonds. Okay, so let's look at bonds inverse, right? They've been going down. So bonds have been going down, they're getting sold. All right, when these get sold, the yields go higher. So smart money's in bonds, okay? It told us the move was going to happen lower. So let's look at our VIX. Well, not this, right? That ain't the right spelling. Let's look at the VIX. All right, I said we needed to get over 22. We were hanging around 23. We dropped back down to 21.97 right now. Okay, Nvidia and all those other stocks I told you, Baba, AMD, they're getting a little nice little bounce from that. Okay, now let's look at that dollar. Now the dollar broke out of this range, like I said. Now we're at this pivot. We're at a old resistance level that was broken momentarily. That we're back at it. It's at 104.64. Next resistance at 105.3. This keeps moving up. The TNX keeps moving up. Not good for equities. The VIX has come down a little bit, but we're still over. The VIX is still above almost. It's still around 22. Okay. All right. Let's get into let's get into that level that I was going to talk about. All right. Let's go back to the SPY. And we'll go back to the market profile. Well, volume profile. So I'll just show you that really quickly. Let me hit you with your watch real quick, and I'll just pull up this chart. Just give me 1 second. I'm just going to get these drawings off so we look at a nice clean chart. Give me 1 second while I do that. It's going to take me 1 second here. Alrighty. Let's look at this chart. Get my trusty marker. Okay. So this is the chart of the ES, right? And you'll only see two volume profiles on the side here, okay? The green is this year's volume profile. It's for the year, okay? Now notice 40.15 is the most traded price of this year so far. You can see we have a high up here and a low up here. This is just for this year, Okay, the green, 40.15. Coincidentally, okay, 39, call it 4,000, call it 39.99.50 is the most traded price of the last year, meaning February 23rd of 2022 till now. Now look where the price is at right now. This is the tipping point for the market. Okay, this is the tipping point. This is the fight that has to happen. Okay, this is going to decide what happens from here. Now overall, what I see, no bias, I see we're probably going to make new lows sometimes this year. All right, but in the near term, this is going to be the move for the market for probably the first half of the year. Okay, if we catch a bid and we start making higher highs and higher lows, we're going to go higher from this level. Okay, however, if we cut through it, we start making our way down, we're going to go make new lows. Right, and not only, not only does this level exist, it just so happens to be that the 200-day moving average, the 50-day moving average are all here. A trend line, right? Easy to see a trend line from here. You could see this trend line. In the market, like that's also here. It's just so many confluence here, right? And even if I zoom out, and now you can fully see this is a year ago, the whole chart, and you can see the whole profile. So this white profile is the last year. It's all the way back to the February of last year, and you can see with volume profile, right? If you just look at this, you're not gonna know, oh wow, where's the most contracts have been traded, right? You're not gonna know that. But there's no coincidence that this and this line up. Most contracts have traded at this price of the current year and of the rolling year. Okay, so that's gonna go, we're gonna do this, and most people feel we'll probably top out here around 4,300, maybe a little more, almost to 4,400, right? And then here's our lows that I feel will probably be broken. Okay, so that's why this level is so important. Okay, this is indisputable. That's why I love the volume profile, is because this is the most contracts traded for this year. This is the most contracts traded for the rolling year. That's how important this level is. Not only is it the psychological level of 4,000 on, the S&P 500. So there's so many things, right? 4,000, that number, 200-day moving average, and the most traded price, right? So that's why that's so key. It's the tipping point. Who's gonna win, bulls or bears, right? Hope that makes sense to everybody who was watching, right? That's why it's so important. Now I'm showing you with candlesticks right here because probably most people relate to candlesticks. Okay, so let me take it back to the let's get into the market profile, my friend, my trusty friend. All right, let's get into what happened yesterday. Right, now we talked about all those levels, So I'm gonna put some of those levels back. Just give me 1 second, guys. I'm sorry. I apologize. I just want to make sure I have all the levels so I can properly give you guys the correct stuff. It would take me 2 seconds because I hid them on the other one. Give me 1 second here. The levels are back. Alrighty. Alright, so let's look at yesterday. Alright, so I have it split out of yesterday's session. Now, part of my levels, this is the most traded price of that year. This is the most traded price. I'm sorry, this is the most traded price of this year. This is the most traded price of the last rolling year, right? That's always on my chart so I can see where they are. And I was saying yesterday with the 200-day moving average right here, it's going to be very hard for us to get lower yesterday. And that's what happened, right? We tried to go lower in the beginning of the session, and then FOMC minutes came out. There was some volatility. And then we came all the way back down. And what did we try to do? 200-day moving average, couldn't do it, and ripped back up, right? That was to be expected. And that's what happened. And it's not meaning I could tell the future. It just means that saw a lot of this before. Usually following trend day, you get digestion. And we just have such a huge level, like that tipping point I talked about, that people aren't just going to just blow through that level. It's not going to happen usually. The odds are in the favor of not doing it. It doesn't mean it can't, right? Couple things from yesterday. We have a prominent POC. I've talked about this before. It's a market profile terminology. Okay, right here. So it says POC. So we hit this price, which is 4,006. We hit it once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, 8 times. 8 times that was hit, and that's considered a prominent POC, a prominent point of control. Okay, that just means the tipping point for yesterday, the most traded price was here. Now, usually when you have a prominent POC like that, it usually gets tested the next day. Okay, that's what usually happens. So we wound up closing here, right in the most traded price of the rolling year. Okay, but now with Nvidia and stuff like that, we have to see, or testing. Now remember the session before I said the 50% retracement 40.2975 would be very important to see if the bears can hold us under that level. Okay, now I'm gonna shrink this back down. Bear with me. Okay, so look at the profile now. Now we've made, I told you this yesterday, the most traded price of the week, which is now 4,006. Okay, it happens to be the POC and the volume point of control from yesterday. Now that has moved from here to here. I said that's going to help us make a move lower. Most traded price is down here now. So let's stay below it. We're probably moving lower. Now, of course, if we stay above it, we could go back here. So now let's look at today's, what's going on in the overnight. Okay, let's look at it. Can make it a little bigger. Let's make it a little bigger. All right, now just so we can see the composite profile on the side of the rolling week, right? You can see we have profile looks more like this, right? has a bearish imbalance skew to it. Why? Because the most traded price is down here now, right here, along with the 24-hour one right here. Where's price? Right there, 4,015. Okay, see how price is starting to come in? Now, there was news that just came out, and we're starting to come back in, right? Here's that prominent POC right here. Okay, so real quickly, I just want to see what happened with that news. That data, I didn't know if that was going to be much of a market mover. Jeez. All right. Okay. So GDP, what do we got? Quarter over quarter. They forecasted 2.9. It came out 2.7, so that's under. However, price index, GDP price index was 3.5, the actual 3.9, but the jobless claims, this labor market is tight. Forecasted 200, only had 192. That could be why we're pulling back a little bit. That's most likely why. Okay, you want to see that number grow. Okay, this just means the Fed could still be aggressive. Okay, let's go back. There's always something, right? All right, let's look at this. You got yesterday's high, 40.26. Yesterday's low, 39.83. Right at that 200-day moving average in the futures market. Okay. So we have overnight high here, 40.24.50. We have the overnight low at 39.98. Okay. Now, a couple things. First thing I'm looking at. So everything from the close, everybody's long in the overnight. So we got 100% net long inventory, 100%. 100% net long. Okay. And we're within the session from yesterday. Okay. So this is one of my favorite trades. Okay. So if we're 100% net long from the close and the overnight, that means everybody from London and Asia has been long since the open. No shorts. All right. So this makes that prominent POC, which is right here, will most likely get tested when we open. If we don't go any lower, and let's say we stay up here, this will most likely get tested. It could bounce off it, or we could bounce here, but that's usually what happens. This is a magnet, guys. Prominent POCs are magnets. Price just comes back and retests them, and it could go higher, could bounce, like I said, or it could go lower, but that's just how the market works. So keep that in mind. Okay. So again, we're holding these lower prices. That is bearish in the short term. Okay. We're holding lower prices. The market's accepting these prices, right? This is that 50% retracement of the move lower. We have not violated that. Okay. Don't worry about these prices inside here if they do this. That's just smoke. It's a smoke screen. Okay. Think about the structure. That's the important part. When I first started, the price would lull you. It would make you think things that were happening that weren't. Okay, that's why I said this line in the sand is very important. The 50%, the midpoint of that move lower on that trend day. So the market's telling us we're accepting the prices lower right now. That's indisputable. We're accepting lower prices. Sellers are in control right now. Okay. And you can see we have a couple highs over here, like here, here, and here. Now we're making kind of a bracket up here. We have a supply zone here. Okay, so that's kind of like I said, you have your 50%, and then you have this bracket here. So the name of the game, because we're still, I feel, going to balance, is just the outside in plays, right? So if we come out here and we can't get out of this supply zone, then you're going to want to fade it back. Same thing with, you know, along. Okay, let's say we come down here again. Now remember, you got 50-day moving average, you got the 200-day moving average, the most traded price of the rolling year. Like, there's a lot of crap down here that, you know, and we're at that 4,000 level. It's just, if we come back down here again, hit that trend line, we could just take a long and go back. All right, and then of course, what could happen if we break this? Like I said, this bracket high. If we break this, break the 50% retracement here, yeah, we could start moving higher, as well as on the low end. You know what? If we come down here, we break the 200-day moving average, hold under it, we could go lower. I think it favors the outside in trade today, the high probability, than breakouts. But breakouts can happen any day. News catalyst, whatever. I think it favors the range trade, outside in, play the edges, fade the edges. That's going to be the name of the game today, okay? Let's look at the NASDAQ. This is what happened yesterday in the NASDAQ, okay? So NASDAQ, where do we go? NASDAQ violated the 200-day moving average yesterday. Dipped below it, but look what happened. Couldn't sustain it. Couldn't sustain it. Also has a nice prominent POC. Also moved the most traded price lower of the week till 12100 or 12,100. Very important, right? Nasdaq did it as well. Brought the most traded price of the week lower, which is bearish. Okay. That's why I said yesterday, it's very important. I said back when I started, and I've only been doing this 5 years or so, looking at this, but in the beginning you're so excited, like, oh, I'm shorting, right? Meanwhile, 200-day moving average is here, and like the first day, you're after a trend day, shorts just got too short, right? And then what happens? We pop up. Probabilities are people are going to get short in the hole, so that's that. So let's look at what we're doing now. Now, of course, the Nvidia thing, you got tail of two different markets here. You have a disconnect. That always makes the market harder to read. That's going to make this market hard to read. Okay? Why is that? Because you want the markets in sync with each other. It's easier to trade, otherwise they're going to be fighting each other. All right? Nasdaq is tech heavy. XLK is 26% of the S&P. All right? So what tech does usually what the market's going to do. It might take a while to follow it, but tech will lead the market. Now, let's look at this. Yesterday's high, yesterday's low. Overnight high, and look where we opened, right at the most traded price of the week and the most traded price of yesterday. Okay. Now, I see another nice trade setting up here. Okay. And I'm gonna just notice we're gapping higher right now. Here's the overnight high. Here's the overnight low. Here's yesterday's low. Here's yesterday's high. We are gapping higher. Notice in the ES, they're not gapping. There's a disconnect. Here's a disconnect here. Now, very important as well. Here's the 50% move on that trend day. Right here. Actually, it was yesterday's high. Yesterday's high only went there, right? Well, overnight, we're above it. We're above it. We're right here. We're above that price. Now, I just showed you that price in the ES. We're not close to it. And we're above it in the NASDAQ. That's the difference in the strength, right? That's the difference in the strength. What do we have too in the overnight? This is from NVIDIA, but you have single prints here. All right, that's emotional buying. But it's also, my girl Rosita loves this, it's a toothpick holding up an elephant. And that ain't going to do so good if we come back down here. So let me set this up, okay? If you have the most traded price, the most traded price of the week, the most traded price of yesterday, prominent POC, and the overnight low and the close, all right here. And you have single prints to here, the toothpick holding up an elephant. So one thing I'm going to look for is the gap. Okay, here's the gap. You know, and like I always say, do we gap and go? Bullish, right? Bullish. Do we not even fill the gap and go higher? Bullish. Do we fill the gap and then go higher? All would be showing strength, right? Okay. However, if we fill the gap and we drop back into range, now think about it. If you own NVIDIA, you had a day trade, played the earnings, right? You're going to want to probably take profits. So if we start to come back into range with some negative catalysts also in the market, and we start pushing down with volume, well, guess what happens here? We go into these emotional buying of the toothpick, and we're going to probably make a straight shot. Now, this doesn't mean you have to, but with volume, you most likely would come down, clean these single prints. Now, here's the big key. Here's the big key. You either bounce off this. Now this low is weak. Okay, I want to explain that. This low is weak. You have the overnight low, the settlement, the most traded price of the week, and the most traded price of yesterday. All right here. You break this. The overnight long's got to cover. And whoever got long here yesterday is going to get hurting, and it should cause a nice move lower. Okay. Now, as far as the long, you got to honor it. If we come down, and of course, even got more confluence, this is the 50% of the big move lower. If we hold it and if we hold this level, we could bounce and you can go long, targeting this supply zone and the highs from that day. If this market's strong, that will be 50% retracement. That's the long. Now let's look back at the ES just to show the difference, right? You got a gap up and you have no gap. Tell two different stories here. I mean, NVIDIA is up 12.44% now. Wow. We have to see. If NVIDIA people take profits, then you're going to see a different story. But that's going to be it for me. I hope everybody got some insight of what I'm looking at. Like I said, markets are disconnected. So can tech pull S&P? Can the NASDAQ pull it higher? Or does NASDAQ run out of steam and then we just go back down and we balance more, right? That's kind of like what we have to see today. All right, that is it for me. Give me a comment, like, or subscribe. Of course, you can always go to my Twitter to see when I'm gonna having videos. All right, and stay patient. Hope everybody's green today. If there's something to note, I will make an update. Alrighty, and good luck. I'll see everyone tomorrow.